Mark from Blunthouse Technical Analysis, and I am back with another session of Chart the Markets with our good friends from FEG Token and SmartDefi.com, and of course, our exchange partners at BYDFi.com. And if you want to get in a BYDFi account of your own, it's an email sign up only, and our code is capital K 5, capital Z 4, capital T, lowercase p, and that also gets you eligible for our draws that we do for some trading bonuses every single week, every single session actually. And what we're going to start with today, because there's a lot going on that I think we need to talk about. And before I get too far into it, I also want to say that we're very fortunate to have Rico Moneybags with us today. Hello, Rico. Glad that you're here.
Appreciate you, man. We all miss you, so I'm glad to be here. Yeah.
Well, I'm glad to be back. A little vacation was deserved. My friend got married in Italy, and we went over for that. It was a blast, and we decided to make a vacation out of it as well. So it was as nice as it is to be away, though. It's always nice to come home, and I'm glad to be back here with you guys too. So what we're looking at, and I talk about this all the time, and I probably sound like beating a dead horse, but I'll say don't trade chop, don't trade the chop, just trade the breakouts and the breakdowns. And in the early hours this morning, I happened to be looking at some charts, and I think it was the 30-minute that I had put a tweet out about, but it was essentially what you see here. I've just put the 1 hour up to make it a little cleaner. But this is the perfect example of the breakouts and the breakdowns. What's the chop? Right in here, right? This is our accumulation phase. Here's the breakout, acceleration. And here's the breakdown, which is the exhaustion. Real clean, clear, simple. Of course, you could see another exhaustive wave down here as well. But when we're looking at this chart, just with our indicator of the T line and the 5 EMA and our volume profile, we get a signal at 1 a.m. in the morning, and price just falls off a cliff, right? But it's easy to see for us because when we're running this, we just do what we're told, right? We just do what the market tells us to do. And we get our signal. Of course, you got an opportunity to get in early up here because you'll see that your 5 EMA goes red on you real quick. But that can often be a fake out. We have to know that in advance. But in this case, it was an early entry. Then you get your safe entry, and the divergence after that point just explodes. That divergence is momentum, in this case down, obviously. And what do we have here? We talk about this every single week, and we show it on various different time frames. Impulse down, and then this is looking like a failed breakout. Did we produce a buy signal anywhere in those 6 candles? No. Which is telling us that we didn't have enough momentum to pull price, or I should say the 5 EMA, through the T line. There wasn't enough momentum in price to do that, even though you had 4 or 5 candles that were bullish, but you didn't have enough to break the T line. And what happens? What tells us about changes in direction? Points and flats quite often, and you see them in some of your indicators. Well, there's another. That's what you'd be looking at. You'd see that point out, and then price just moves down. So all these are just essentially green candles in what turned out to be a continuation of a downtrend. But we were being told that the whole time because the divergence between those levels held. And that's really hard. Like, this is an hourly. Let's look at the 30-minute. This is a hard thing to do, right? Was to watch price go up and be like, oh no, you'll see in here you start to get some buy signals, but that's why we're going to use the 1 hour because it's cleaner. But it's hard to watch price go higher. And you really have, and it does take time to trust your charts. We're going to trust what the market's telling us. This is a language. If you believe math is a language, this is a derivative of mathematics. Thus, it's a language unto itself. And we just have to interpret what the chart's telling us. And there's going to be, various different technicians that will have various different methods that probably all work too, right? For certain they do. And all I'm trying to do is just take my own experience, simplify it, because there's no reason that we need to make this more difficult than it needs to be, and to understand that, if you were to, what you're waiting for is the breakout. Here you get it, finally, and price takes off. Divergence opens up, so as you see these candles to the downside, do you worry about it? No, because you understand that that divergence is telling you there's still momentum up, even though these are negative candles, or red candles. And secondly, they're finding support. So that's comforting to you, allowing you to trust this chart. If this was to fail and it starts to roll over, that's a different story. Right? And here's an example where your 5 EMA went red. I don't know if you can see this in here, but ultimately it's just those 3 candles. Right? So that's where you have to be careful that it's could just be a slight pullback and then price carries on like it did here and takes out the previous wave's high and so on and so forth, which it did. So just a real clean example. You want price to break out a consolidation, and yeah, it looks like it might take a run for a while. Box in a range for yourselves, right? As soon as you get an opportunity to do that, it's not going to be 100% all the time. That's okay, right? Again, it's not pin the tail on the donkey. Box yourself a range. What you're looking for is price to trade over a consistent level. You get this pullback here, and then boom, a nice green candle, and then price takes off. There's no question this is a significant uptrend, right? So.
Yeah, I just want to talk on something right there.
Yeah.
Yeah, because it's perfect because, you got all this knowledge and little stuff. I know as somebody who's getting better, they might not quite understand. And so I've been using what you use lately as well, the Fisher transform, which is super powerful, man. I mean, Blunt, you're always giving away these gems and stuff. And I think what the Fisher transform helps you do, which is something that you were talking about in this little part of this video right now, is the divergence and being able to stay in the trade with because of the divergence, right?
Mm-hmm.
And a lot of times you'll notice that although on the candle side is looking like it's trying to psych you out, right? Like sometimes maybe you could have been in that short and you see, a couple green candles in the downtrend. When you really look at the Fisher transform, the divergence is hardly ever broken. You'll see that those 3 green candles didn't do nothing to break the divergence of the Fisher transform, especially like on a higher time frame or whatnot, like that. So that's where like I've been using the Fisher transform lately. I've added it to my repertoire and stuff, and it's been really good. Where in times where like, it's hard to, you're in a long, you start getting a couple red candles, you're like, oh man, I don't want to give back this profit. But what's helped me is I look at that Fisher transform, and then you look at the T line, you look at the 5 EMA, and you're like, there's all this divergence on all these parts. These candles are trying to throw me off when there's some background stuff that I need to pay attention to that's really saying that the trend has not really stopped. It's just a couple red candles.
Right. And I find, maybe the way to look at it in some way is that, yes, we're trading price, but we need to be able to trade trend, right? And understand trend. And if we get over focused on price, then we get over focused on the smaller time frames, intraday time frames. And then you find yourself getting chopped or chopping yourself, right? It's just, I think that the simplicity of what we're doing is key. And, the reason that I like the Fisher, because as you know, I believe in fibs, fractals, and filters. And the Fisher transform uses a Gaussian channel to filter out noise, right? So if I blow this, this is the fissure here. If I blow it up, this is telling us that we have a nice clean move down. Here's another one, another, nice move up. You don't get chatter. And when you do, then it's obvious consolidation, right? But these nice moves where there's separation and divergence between the two, that just tells you that you're trending down. That's all. And it filters out all the, because the stochastic RSI can get really chattery, right? And how many of us know traders that will trade every cross of this stochastic RSI?
Exactly.
Right.
I think every trader, when they first start off, when they first start, they think they figured it out. I was like, I'm just going to trade the RSI when it crosses over and lose all my money right away, right?
That looks easy. But what we're looking for ideally, and maybe this comes back to the ideal setup, and everybody can maybe think about what their ideal setup is. But in a perfect world, let me go maybe over here. So in a perfect world, let me get rid of this stuff too. So we've got all this chop, right? I like when I can find these overbought or oversold signals. Ideally, that's what I'm looking for. This overbought set here did nothing, right? So it just goes to show you that not every time, yes, there was a little pullback in price, but not as drastic as what it would indicate when you look at the indicator itself. But here's the one that gets really kind of where price takes off. You see this point? We talk about the points and flats, how they can indicate changes in direction, and they show up in other indicators. So here's an example in the stochastic RSI of just that. This big move down here, you see how the orange line gets very separated and far away from the blue one?
Yeah.
So that's kind of creating a snapback type of thing, right? So they got to catch up to one another. And sometimes price slingshots when it does, both up and down, depending if it's overbought or oversold, right? But that's kind of what you're seeing here. So I look for overbought and oversold, and I like the ones in particular where you see that. Not often do you see them though. But here's an example of one. Same thing happens with your Fisher transform, right? All of a sudden you get whoop, little double bottom thing, poop, they pop apart and it looks like it's trending higher. Nice and clean. MACD, this is a real nice example because you finally made it to the zero line and you get to the zero line and boom. Breakthrough. And that's telling you that price is moving higher. So all of these things combined, right? That's your perfect setup. Same with this Fisher and same with the MACD. But you don't often see this. And then you start to trend. There's an example of your stochastic RSI just kind of hugging the ceiling, right? Some people would see this and go, I'm going to short here because, oh, it looks like it's got to roll over now. No, it doesn't have to do anything. What it's showing you is that these buyers have gone nowhere and they're hanging around. They're hanging around, right? And look at what's happening to price. And if we look at, as this is happening, notice how the divergence increases between the 5 and the 80 MAs, and that's just, again, momentum, right? These buyers, they didn't check out. Here's where you get a little lofty, right? You get this gap right between price and this short-term indicator, and price does what? Horse doesn't like to be too far away from the bar, and so it comes back home, but it doesn't break down. Like a lot of people will see this and go, oh, that's it, short city. And then they do, But the market told us that this was still an uptrend that was intact. And notice your stochastic RSI now that it's oversold, starting to kick higher. Now your MACD moving average and signal line is already above zero, so it's already in bullish territory. And the Fisher shows you that it wants to kick up too. And then this trend kicks on. Right? The beat goes on until it doesn't. But because we're not married to price, right? It's just a means to an end, right? Was all we're doing is monetizing the chart. So this big move higher created what? This volume gap. Because these are kind of these exuberant candles, they're just filled with fairy dust and air. There's nothing in them of substance to hold price up when it comes down to get retested. So when I look at the 1 hour, you know, this is the num-num zone, right? Like if you're short, or if you're thinking of going short, what you're hoping for is price comes back to test this level here, which is the upper value range of the volume profile. And, you know, what we get in our script is the advantage to be early without any stress, right? That's worth its weight in gold. So you get a nice clean signal here to go short, is all you have to do is take it. If you've done that and you've taken the signal, all of this is just, let's just hurry up and wait and see what happens. That's it. You're still profitable. You still have signs that this downtrend is intact, and you've got this big target that you could fall into. So you come back and you break this level and you start to get into the gap. You might slow down here for a little bit because there's a little bit of a bench where your price may want to sit, but ultimately this is where if you're short, you want it to go right back to where it's been before, because current price revisits past, right? In the event of an uptrend, like you see here, what was price looking for? Previous wave's high. We talk about this all the time. Does it take it out? Yep. Does it take this one? No. So what does it do? It's got to regroup. Take a breath, go get some flowers and chocolate, and maybe make another run. I don't know. But right now, this is where we're at. We're still in a downtrend. And if we come back and we know this is a draw for price, right? Because price is always looking for where it's been before. And as it's falling, and that's what it's doing in this case. But this is a big opportunity to the downside. And yeah, now it's relevant, right? Just look at the 4 hour quick, because the 4 hour is going to take, again, some of the noise out of the shorter time frame. And again, you can see up here how long the stochastic RSI stayed elevated. Overbought at, 90 something, 94, 95, 93. And then your Fisher just kept pushing higher, right? Little chatter, but kept pushing higher. That's what you're looking for. And then, whoop, there we go. Now we're diverged and we're in the midst of a downtrend. Our moving average and signal line on the MACD is still above zero. So that's bullish, where more positive things can happen than negative typically. But, every trend and every wave has an end. And as it rolls over, if it hooks over and crosses down, it would probably have some momentum behind it. Which makes sense, because what do you have down here? The point of control on the 4 hour. This is why we do fractal analysis. So if we go back to that 1 hour and we have the upper value range here, but on the 4 hour to the downside, we actually have the volume profile, which is stronger. The POC on the 4 hour would be stronger. So I think it wants to come back, test this POC. You can see what it's looking for. Here's your past price. That's giving us the location of our volume profile, going back 200 candles. So when we look at this chart, we had a nice move higher. We trade what's in front of us. Bullish move up. starting to show that we're going to sag. Doji candle at the top of a bull run. Finally, the RSI, stochastic RSI, starts to roll over. You can see all the cues you're getting, right? 1, 2, and 3, they're there because that's the order they typically work in. And we're just waiting to see if we get enough momentum to pull the 5 EMA down through the T line and to see if it triggers the sell signal. If it does, then we might get some momentum into this zone in here. And it's not meant to sound irrational or frightening or shocking, right? It's just, this is the ebb and flow of price. We talk about it and we demonstrate it every single week. If we start to add on some averages, and we're spending a lot of time on this Bitcoin chart, and I apologize for that, so please feel free to tell us what else you'd like us to look at. We'll leave the 100 out of there. So, isn't it interesting where you find support and resistance? 500 MA 4 hour, wicket, run away. So are we looking for, let's just back this up even further. So here we broke the 20 and the 50 on this 4 hour Bitcoin chart. So we broke one level, we found the next. Of course, now that we've broken this level, we're looking for this level and we find it here. So now that we've broken, and this is the 500 MA 4 hour, what do we find down here? The next level down is 200 MA 4 hour. This is basically the first attempt at, I guess, at both the 200 and the 20, which is this green. And first attempts have a higher probability to fail. What happened? It failed. What else did, and look what it wicked. The upper value range. So you're going to find support and resistance levels are obviously going to be consistent with waves up and down, right? So, and when you understand the mechanics of how these waves up and down work, it's really helpful. So we break one level, we do the find the next thing. Well, okay, it makes perfect sense. Here you find the point of control, the POC, that thin red line. So you break, fail, impulse down, and then sideways until you finally get a buy signal. Break one level, find the next, right? Break one level, find the next. And you found the next level here at the 500 and then you failed. This is just these simple things, right? This is basically the mechanics of how price moves. It's not that hard. A little bit of repetition, a little bit of practice. But other than that, it's not that complicated. It's not as hard as people want to make you believe that it is. There's a lot behind everything, sure. But if you have the ability to understand how price moves, then you have an edge. This is the Bitcoin chart that we typically show with these white horizontal lines, and these are levels that we created a long time ago. And at one point in time, I recall saying, this is going to seem nonsensical now, but, you know, fingers crossed, as we move into the future, we're going to be able to see how relevant these levels that we've connected actually are. And if we, I think we first started doing it, obviously, way back here. And look how relevant this 105 level's been. And again, we're doing this really rough, really early. And we're looking for levels, not perfection. Because we want to be able to get close to where we need to be. Once we're in the right neighborhood, we can figure out what to do. Right? But look at how relevant these levels are as we move forward. Like, incredibly relevant. and look to the most recent ones that we've dropped on, where does this rejection happen? Where price has been before. That's why we put these levels here, so that it can draw to our attention that it is a place where price has been in the past. Because if we're going to get a move through here, it would be meaningful. But it's also an area that is subject to failure. And that's what you're getting here. There's not enough momentum to break through the past price and move on to create new highs. There just wasn't. So we get the rejection, and then our analysis just works all over again, repeat play. You can see the 5 EMA turns red. We start to close below the T line. Now we produce a sell signal because we've got momentum down on this time frame to pull the 5 EMA down through the T line. We break the 20 and the 50 like it wasn't even there. And then lo and behold, where do we get some support again? Where price has been in the past, the level that we identified a long time ago. Just so that we can see visually, quickly, hey, okay, yeah, this is meaningful. Let's see what happens. This attempt goes through. We'll see if it holds, right? You got resistance here of the 20 and the 50 that it's obviously struggling with. But this could turn out to be a what? Just a failed breakout, right? Impulse down, go sideways. You come up and test a level of resistance. And if you fail, you roll over, and what happens? You come back and you take out the previous wave's low. In theory. More often than not, right? If that's what happens, if it starts to roll, that's what it's looking for. I'm just giving you guys targets, areas to look for, so that you don't feel like you got to hang on to a trade forever and ever and ever and ever. Before you make the trade, like if you're short here, right? Because we don't like to long into resistance, especially when you've got, in this case, some major moving averages that have twisted together. You want to make sure you get confirmation. So if you would have waited to get confirmation, you'd realize that this was just a short trade, and then, or I should say a brief trade, and then this potentially looks like it would set up to be a short again, and now you've got a target, right? So you could take some off when you get to this level, or all of it, up to you. And then ultimately, maybe the 200 MA on the daily is also a target. And you can see how time and price come together, right? The 200 MA is working its way up into this 105.4 area that we dropped on here ages ago. So that's why we do this, so that we create ranges for ourselves and targets for ourselves, with the understanding that these ranges represent where price, or these levels rather, represent where price has been before. And knowing the importance of that. Saying it is one thing, knowing and understanding the importance of it is another. And is all we're going to do is what the chart tells us to do. And if we look at this daily Bitcoin chart, how do we get a look inside here? We just drop our time frames a little bit. So remember we talked about, okay, if we're trying to sneak an entry onto the daily, maybe we look to the 4 hour to see if we see any kind of a breakdown, and here we have it. You know, probably by the end of this stream, if this gets heavier, we might even start to see our signal flash red. What you want to see here on the 4 hour, and this would be true on any time frame, by the way. You've broken through a major moving average, you found resistance and failed at another, and now you're in the midst of this pullback. It's okay to be early. If you were going to short here, it's okay to be early with the understanding that it could reverse, right? But this is the first touch of the 200, so you're susceptible to finding support at that level. There's a higher probability of that than not. And as I say that, this candle gets heavier as I'm talking, but you know, here's the area that you could bounce at, is what I'm getting at. And then what happens is you've got, okay, big impulse up, you come back down to a respectable level, in this case the point of control, the 200 MA, and then you bounce. And then the question is this, you know, it creates an M, right? So does that create a double top, or does this just bounce, the uptrend continues, and price takes out the previous wave's high? That's the upside. Fail here, and of course you're looking for the 20 and 50. Just some real interesting stuff with Bitcoin lately, for sure. XRP is another one I wanted to look at, because, you know, if I was XRP, I think I'd have an inferiority complex. The pressure this thing is under to be $10 by the end of the year is monumental, right? Like, if you have a TikTok account and you're into trading, that's probably all you see in the crypto space. But look, at the end of the day, that's a big ask, a real big ask. And let's just take some of the broader noise out of this thing. And this is a weekly. Like, do you have any understanding of how much of an ask that is? Like, that's crazy. Price doesn't just go to some place because someone thinks it's a good idea. And that's ultimately what these people are doing. Like, there's $10 way the heck up here, and I have to miniaturize my chart in order to show it to you. Because someone was saying, well, look at that move. Couldn't that, like a move like that, get you to $10? No. No, it can't. It would take a few years of moves like that to get us to $10, if we're being realistic. Do we live in a realistic world? Not necessarily, so anything is possible, but just understand what you're saying when you say this kind of stuff. And don't tell me because central banks and all this nonsense are going to use XRP, blah, 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 blah. Nice narrative. That's all it is. Maybe one day it will be, but it's just not today or tomorrow or next month. And right now, when I tried to express the importance of this, you know, this is a top, an obvious top, and we're going to come back and test some previous levels. So here we are, still in, and now confirmed with this week's open, we're in a downtrend. We have a sell signal on the weekly. You don't want to sell, if you're long, you don't want to sell signal on the daily, never mind a weekly. So are we susceptible to coming back and testing the 20? Of course we are. We talked about this last week, around 270, 250, something like that. And if you bounce, then fine. We're talking about, okay, do we have what it takes to take out the previous wave's high? Again, this is a weekly, so there's a lot of time in here. What's that 250 on the daily? Or 255? The 200 MA. And as all that's happening is we failed particular levels and now we're looking for the next. Created an upper value range at this top. Here's your point of control, which we knew price would come back to, and it has. It gravitates to it. You'll notice how it creates almost an average between the highs and the lows. Pretty easy to visualize that. But you break the 20 and the 50 and the point of control basically all within a couple days, and price just fades. Another example, wick, right? Doji candle here, 4 or 5 green candles, but you know what? They don't have enough in them to pull the 5 EMA through the T line to trigger a trend higher. And then what do you get? Failed breakout. So we look to do what? Take out the previous wave's low. That would be our next target. And of course, if we fail that, we start looking down here because you've got the lower value range and the 200 MA. I'm not saying it's not a good asset or anything of the sort. It's just you have to be honest with yourself about what you're saying when you repeat that kind of thing. It's probably drives technicians nuts, but people who fall in love with assets, they just roll in it, I guess. It's when you're saying that, it's not reasonable. It would take a monumental news flash or something to make that change. Right now, you're in a downtrend, so you keep fading. You take out this previous wave's low, and this is also a structural level. And what I mean by that is, it's just picking up some past price. So support, support, support. Do you want to break a previous level of support? No. But if you do, you got to look to another level of support. Simple as that. Break one level, find the next. Basically, this phenomenon in reverse, right? Here's support, support. This is resistance, resistance. So it kind of will show you why this is a draw for price. Why this is so important to hold. What's your most basic bull bear indicator? The 200 MA. Trading above the 200 MA on any time frame, we'll consider it bullish on that time frame. Trading below it, consider it bearish. So there's a lot of reasons why you want to hold this structural level. Breaking structural levels usually are more of an event than just a regular trading swings of price movement up and down. Move to the 4-hour real quick. Maybe. Did we freeze? Not frozen now. Okay, 4-hour XRP. So we want to get a little insight of what's going on or could be going on the daily chart very soon. We look to the 4-hour. Here you see the rejection on XRP at the 200. And that's relevant. Right? As a trader, that's a meaningful thing. And notice these wicks. Like these are sellers pushing that price down. Right? The objective was to break the 200 so that you could really get into the gap and move higher. But the 200 was just too much. Price rolls over. Right back to point of control. So this is why fractal analysis, multiple time frames, is so important. You will literally see, whether price is moving up or down, it unfold before your very eyes, almost like one of those little flip books. Just monitoring all these different time frames. Right? So what if this would be a short for me? If I was trading this would have been a short. And of course, what you're hoping for is to get some confluence on the daily chart. So if you saw that on the 4-hour and you took that short, you're hoping on the daily that in a few hours you actually see the sell signal yourself, that this trend continues down, and that you've got a nice early entry already from the 4-hour on the daily chart. And that's what we're talking about, sneaking an entry when you can. And if you guys have any questions, please don't hesitate to ask. That's why we're here. Rico's here, so we're going to do CFX.
I was just going to ask you about that because I'm currently in a trade.
Are you?
And our entry was 13,968, and we're currently up 43%. So you guys better smash the like button or that follow button on that Blunt House page that you guys are listening on right now. I know you guys are listening because this is how we find them live for you guys, just like this. Up, 47% now.
What time frame were you on?
I got in at the 5 minute, but I I did a multi-time frame analysis. It was funny while you were talking about that. I'm like, man, I'm lining this thing up right now. I'm about to do it. But I used a little bit of the 5 minute, and then the 15 minute was looking over. So, but you can see the trend really just,
Mhm.
we got some buy signals. I'm using all my indicators. Yeah, solid little quick little trade. Um, I'm not sure why it's not showing a buy signal. Oh yeah, I see it on yours
Yeah,
now.
it's right here. So this is a great example where you get the impulse down and a snap back up, right? So like all of this selling was just keeping your stochastic RSI suppressed. And you have these last two candles are this impulse down, and then this green candle forms an equal bottom while you see your stochastic RSI being really oversold. The, Again, like we were talking about, that's the perfect setup. Does this always turn into a massive spike and run? No. Sometimes it'll hit the 20 and take it as resistance and bam, right back down again. But when you have this setup, you have big selling pressure down, a suppressed stochastic RSI trading, well below that 20 level. Same thing with your Fisher, and then you get those two equal bottoms. There's two equal tops that I would look for to short.
Those equal bottoms and equal tops, as you start to look at this quite often, it's almost like an indicator that you'll start to see it a lot more. And you're like, okay, this could be the bottom. If I get a signal without a question of a doubt, I'm not going to even think about it, right? It's just
Yeah.
like, I got two bottoms. I'm waiting for my signal. I'm going to go and I'm just going to pull the trigger on it once I get my signal. And
Mm-hmm.
yeah, so you're looking at that's the 15-minute candle. If you look at the
Yes.
5 minute, you can see when I got in a little bit earlier. You got the signal a little bit sooner. I think you could see it down there now. Can't
Yep.
see it
There
on
you
you.
go.
Oh, there it goes. Yeah. So right there, that's where
Yeah.
I got in right there. I saw that bottom for a while. It traded sideways for a little bit. You see the a little bit to the left of the signal. It had
Mm-hmm.
got the bottom. Traded sideways for a little bit. I was like, this could be the bottom. And the minute I get the signal, I'm pulling the trigger. If it can trade into some of these gaps, possibly to the POC, the point of control, I'm happy with that. I get my sell signal, I'm out. you know.
Yeah. Yeah, or you might see like a big impulse candle up or something that hits a particular level and then starts to fade. Like those kind of things too usually check me out. But this is a great example, impulse down, and you get this J hook type pattern, as Stephen Bigelow would call it. So here's your J hook. These
I'll
are
see it now for the
usually
rest of my
winners.
life.
Yeah.
Yeah. Yeah.
Now, the second wave of those J hook patterns, so eventually we're going to get a pullback, right? And you're going to have price fade. And then if this is still a trend move, we'll move up and higher and create another similar type of J hook, as Stephen would call it. The second J hook pattern move is usually 60 to 70% of the first one, give or take, a little bit. But that's how, and what will happen is you'll get, your first one, which is your biggest, then your second one, which is a little less rambunctious, and then the third one is noticeably smaller. And then that's the exhaustion coming in, right? So he would always say that those J hooks will reduce in size by 60-70% each one they move up and or down. So you can kind of look for those J hooks when you see them.
And if you see in that trade right there in the 5 minute chart, like I was listening to you and stuff, and yeah, I got into the trade, and you got nice 4 green candles come out after that buy signal. But that red candle right next to it, it was trying to scare me out of my profit.
Mm-hmm.
And if I would have took that, it would have been like a 20% trade or something. But because I did not get a sell signal, I just stood in there. I was like, you know what? Let me just stay in it.
Yeah.
It's finally breaking over this moving average. This is normal. It's going to test it a little bit, and then And this is what that practice does. The divergence right now
Yeah.
that's happening. Like, let's stay in this trade, man. It
Yeah.
could be a winner. And
Yeah.
so we're doing it live right now with you guys.
Yeah. And what's actually really neat about this too is that so you get this red candle, but notice it doesn't make its way back to the 5 EMA. It just kind of hangs. Then you get the doji, but right at support. So this is what I'm watching. This divergence. I'm like, okay, the market's telling me this is a move higher that has some momentum. Don't let that scare me. This actually gives me some confidence all of a sudden. And then your next green candle, remember, this green candle would have looked really red at one point, right? Because it came back here and tagged the T line.
Yep, yep. It did. That's the
After
one that.
that,
Oh,
that's the one that was going to scare you.
that's the one.
Yeah. So what you'll see after a while is that those tests of the T line are often bullish when they hold, they're bullish. This is where it gets a little interesting for you because you're starting to see a flat, right? You
This
just
is where
don't
it gets
know
interesting.
what the next candle is going to print.
You don't.
So
That's the beauty of it, Blunt.
yeah, right. So this is why you're looking at different time frames, right? You see what you see on the 5 minute, well, you switch to the 15. And this has been like as a 15-minute move. That's a pretty healthy move higher because it's taking it on the chin a bit here, but that's a healthy move higher. And this is probably where you would expect to find some reasonable resistance. But you're not going to panic because you understand that that's, for one, that's all it is just resistance. And this is a process of just, applying rules to the scenario that we're in. This is resistance, but we're trading above a certain level of support. We're starting to see the divergence in the T line and the 5 EMA telling us that this has got some momentum to it. This is I guess we're going to call this a first real test of the 50. I guess it is. So we would expect some resistance here. And if you do get a rejection at the 50, where do you expect price to go? It's going to come back, probably test that level first, but you're really going to want to see it come back to the 5 EMA or the T line, right? A break of those levels, that's when you're looking in a potential reversal. But
Absolutely.
you could just have initial resistance, maybe work your way down back to the T line and you pop a little bit, and then the second attempt is more likely to move through it. If it does break, yeah, if it does break through the 50, that's just bullish, right? Just because it's resistance doesn't mean it absolutely has to stop. If it breaks through, we understand as traders that that's a significant move higher with some momentum, and we should pay attention to it.
And I think what helps me so much, and I mean, I repeat this in my head. I mean, I even say it out loud. People might think I'm crazy or something, but that if you look on that 15-minute candle, that is the first red candle in that trend.
Mm-hmm.
And it's literally like what you say is like, it's just a red candle in the freaking uptrend. And like, it's it's the first one. It's like, yeah, it can turn around. That's cool. And we get our sell signal. That's perfectly fine. But can we give ourselves a little bit of room where, let it just be the first red one, and possibly, if that next one's green and it breaks past that 50, we just caught ourselves the runner for the day, right? And I'm done. I do the rest of the work that I need to do and enjoy the rest of your day. And everybody can do this. Everybody can do this.
Hang the gone fishing sign on the door.
Yeah, no kidding.
What you see here on the 15-minute too, guys, is that you've got your 50, which be just a trade, or is it a runner, right? This would have been a real nice trade. But this is your first real look at some resistance, and you have to have this, the wherewithal to be able to manage the trade through this. And how I do it is I just use the T line and 5 EMA as my main measure. right? As long as I have that divergence, I'm still bullish. So I'm prepared to hang out and let this figure out what it wants to do. And of course, we're going to use other time frames at the same time to help us. So we just switched to the 1 hour. There's your group of 15-minute candles. And interesting, excuse me, we haven't pulled the 5 EMA through the T line yet.
Right. It can be going down then. Well, as you take a drink,
Thanks.
I
Appreciate
know, I
that.
know, I know Blunt already, man. It's so nice to know you, brother. But I got a question for you. I got a question for you because this is I love when we have these sessions, and I kind of do this to myself on purpose, where I put myself into a trade. If the setups line up, not purposely like force a trade or nothing like that, but if while we're live and we're conversating, that I can jump into a trade to have this conversation with you.
Mhm.
And then you brought up a really good point right now. We're like, okay, this is what you just said. Is this just a trade or is it a runner? And now this is my question for you.
Mhm.
How have you how do you feel about taking partial profits off of a trade to be like, okay, let me take my initial off of this because I think maybe this could just be a trade, but let me leave a little bit in there because I technically have not got a sell signal, but it could just be where it's just a trade and I want to at least secure these profits,
Mhm.
or do I just let the whole thing ride? Are you or have you taken like, like sometimes, and I'm putting myself out there. I like to wear my heart on my sleeve.
Mhm.
Um, I'll do like sell 25% of that position and then just to secure a little bit, or 50% of that position, and I almost feel like this weight lifted off where it's like, okay, let's see if it's a runner, it'll run. Then if it's not, then at least I secure the bag.
Yeah.
I know that's a tricky question because I'm Rico and I throw all the
Excuse me.
stuff all over.
Yeah. Let's take a look at this 1 hour. This is still CFX. So here you got a sell signal. I like the 1 hour. Excuse me. I like the 1 hour for this thing myself, and the 4 hour. But this 1 hour I'm familiar with. So there's your short signal. Starts off kind of slow, right? You again, you don't know what happens. You just don't know what's going to be after each and every candle, right? I just simply let this guide me as my main map, right? This is kind of the follow the yellow brick road routine. Um, I used it before I started really using this method seriously. I would I would take off, X% at certain levels and, close it out at something else and leave a runner and all that. But in my experience with crypto is that it became problematic for me because of the volatility, right? Like I just found that price whips all over the place, you know, doesn't really change trend, but it can get volatile real fast. And then I was, you get knocked out or certain part taken off and then the other part just never materializes. I just found it really difficult to manage. So now what do? I look at I have a target, an exit before I start, right? Now, I honestly can tell you that I was in this trade on the way down, and I took nothing off the whole way down. Sometimes I will take out my initial, but why did I do it? Because to me, it looked like the runner that you were talking about.
I think I just caught one on the upside right now. And what's funny is I'm glad you made money on that downtrend right there because that's where I got stopped out.
Yeah, it
And
was
that
me.
just goes to
It was me. Yeah.
that was you.
Yeah.
That was you. No, but it's just funny because right around here there was actually a buy signal that flickered off or whatever
Mm-hmm.
inside this section, and so, yeah, somewhere in there, and it had flickered off, and I had walked away or did something where I wasn't supposed to do, and boy, did I learn my lesson, because when it came down, I got stopped out right here, and this is where that downtrend, and I was like, let me just let it do what it has to do.
Yeah.
I'm not gonna chase it. Let me let Blunt make some money off of this trend. but then I'm back in my groove. But right around there was that's where it happened. I remember that hour chart too.
So I guess to answer your question honestly, the more confidence that I have in this system and methodology, which is pretty strong, I'm very comfortable taking a signal. And look, like this is consolidation, right? We don't know which one of these candles is going to be the one that either is the green candle that takes off or the red candle that rolls over. And you are going to get stopped out from time to time, or you're going to shorten your time frames, and because you're probably looking for an early clue on what direction it's going to take, right? But I am pretty comfortable just letting this divergence guide me. And to be honest, if I get these ones that kind of go that have coming out of sideways trading, and it looks like nothing's really happening for a while, like you see through here, those can either you end up washing them a little bit green, or price just capitulates, right? This one just capitulated. All the way back down to the point of control on this 1 hour.
Oh my God. I think that was my computer was. I didn't mean to cut you off right there, but I got another one for you, Blunt. So you said you trade like all the way to your target. Like right now, I'm getting close to like my initial target. If that divergence and everything's still there, if it hits your target, you just get out, or would you use that same thing where like, okay, hit my target, let me get a piece of it? And I think I'm just trying to get to that point of where like, just hey, I'll either be a runner or whatever to what it's got to do.
Yeah.
But
so in a case like that, so let's say for example, it's a trade that you made late in the day, and you're going to let it run overnight, right? Let's say you're profitable. You've already got an exit target set and a stop set, like either a trailer or a hard stop. When you wake up in the morning, one of three things is going to happen. That trade's still going to be open. You're stopped out, or you hit your target. And I tend to do that a lot. I know where I want to get out when I get in. Like if you enter this on the 1 hour, let's say you love these double bottoms on the 1 hour here of these two candles. What's my target? The 20, right? It's my next major moving average, the 20 or the 50 up in here. And here's what you actually hit it. So, you could take those bottoms, have a target at the 20, take it all off or take a percentage off. If it looks like it's going to run, well, then you're obviously going to want to leave some there, right? But I really like setting my targets and just leaving them, especially overnight.
Yeah, right now I'm just watching this CFX. I'm sure a lot of other people are watching it. This thing's been absolutely amazing. And I've just been trusting the process. Right now that turned into a runner. We did it live, and a lot of people try to complicate this more than it has to be. If you wait for your setups, and I think that's what happens a lot of times, is getting impatient, like trying to force something to happen, and like, man, that's so dangerous to do that. And if I can go back to the beginning of time, I wouldn't make patience the way that we get virtue, but unfortunately, I can't do that. And if you're patient enough, like honestly, I'm no genius or nothing like that. I'm using some simple indicators. One that I really like, which is Blunt House Indicator. Make sure if you guys are listening on X, you guys go to his website. I'm doing all the influencer stuff for Blunt. Make sure you guys go to his website and go check out this indicator, because I've been making some posts on X, as you guys can see, at Rico Moneybags, of this trade live that we're doing. So anybody can do this. And, if you eventually practice with a demo account on BYDFi, or, I'm pretty sure Blunt can as well, or myself, will load your account with a bonus on there so you guys can get in the mix. Just practice for 30 days on a with that bonus, or use the demo account and use the strategy nonstop for 30 days and prove to yourself that you can be a profitable trader be patient with your strategy. Don't do one strategy on Monday, do another strategy on Tuesday, do another one on Wednesday. What you're going to end up is liquidated. You're going to end up with a blown account. So
Yeah.
pick one strategy that you feel you're strong on and do that one for 30 days straight. Whether it works or don't, at least at the end of the 30 days, you're like, hey, this is one that's not for me. Don't hopscotch around every single day because it's going to be hard to build a rhythm like that.
Yeah. You got to get your reps in, right? You got to get your reps in. This, what I was kind of thinking was going to happen, this is a pretty significant failure of the 50 on the daily of CFX, right? So, you failed the 50, broke through the 20, and then, of course, get your sell signal and everything just opens up. I wasn't expecting this candle a couple days ago, right? That would have been over the weekend. And that's the one that washed me out of my short. So it's just a matter of, because I really do think this is going to break down again, right? And I think you want the 200 right here. And since we're here, let's line up some past price. Just for what's and giggles. And again, this is not pin the tail on the donkey. I'm just lining up where price has either found this level as support and or resistance in the past. So we'll just leave this level here and see what happens. But if you don't hold, like this is the 500 MA on the daily, if you don't hold it, and you can see it's acting as pretty significant support, but if you don't hold it, you'll look to the 200 automatically. And again, this level here that represents areas where price has kind of found itself in the past. Right? We show it all the time.
What price is that you put that white line on?
It's 0.10973.
Okay. I was thinking that it could eventually flush like 6 cents possibly, because I saw like a lot of prior price where like buyers and sellers shook a lot of hands in that section. But
yeah, I see
yeah.
it too, like right through here, right? Like that's the 8 cents, and then if you get real greedy down here, there's your 7. Those are obviously legitimate areas of support and resistance when you line them up like that. But I think more realistically, we're going to be looking through, the 200 and or again through this level in here. Like maybe you get a wick down or something like that. But nevertheless, you've been getting support off the 500, and if you fail it, you'll look for the 200 and so on and so on. That's what I kind of thought was happening here. I wasn't expecting this sideways stuff for as long as it's been.
Yeah. And I think like how that overall that I just did a long, and it was just because the overall higher time frame, is saying down, you can catch those snapbacks and make money if you're focused on just waiting for that strategy to pop up like for you. Like there's tons of these little windows that pop up every time. Like most people look at this chart and just see nothing, but that entry on that 5-minute chart was, pretty profitable. It was over 50% trade. It's not a 300% trade, and I can make those happen. I just got to pick a higher time frame and hold it longer. Yeah. But I can make 50 to 100% almost every day if I really want to.
So here's the 15-minute again, right? There's the wick at the 200 at our previous level, and then you can see we're hanging on. But the short setup was here.
Oh, this is a good example of holding, it's on the 5, we still got a long signal. Still, the long signals are still intact. Yeah. And these are just technically red candles. But, this is where you got to be stoic. You got to be like a Greek statue, just be like, put your arm on, put your hand that you use to touch your mouse on your chin, and just sit there like Marcus Aurelius and just wait for a while or something like that until you get that signal.
Everybody, I think, and you guys tell me if you think I'm wrong, but I think subconsciously, there's people that just can't allow themselves to see a red candle, and they'll exit And then they'll realize exactly what we just talked about, how, oh, there's just a few red candles and a further uptrend, and then it bounces. Maybe it comes back to the 20 or the T-line, bounces, and then takes another run at the 50, probably where they got in originally, and then it blows through, and you know what I mean? And then they just end up chopping themselves up. So this is doing exactly what we thought it was going to do. I love doing this stuff live.
Right, man. It's all doing.
Like,
Yeah.
no crystal ball. This is just how price moves, right? Are we going to be, forensic to the penny each and every time? No, but we're going to get really close. Sometimes it looks like we're to the penny. But ultimately, we just want to get really close so that you can manage a trade. That's it. Yeah, that would be a target to the downside. If we look at another thing that moves around real quick, it's this Xano, right? Real clear signal. This was a beautiful move higher, but totally sideways. Can't break that 1725.95 level, with the exception of the wicks, and then you roll over. But this thing moves with some velocity, as you can see. Another example of the two equal bottoms. And let me guess. Yep. Look at your stochastic RSI and your Fisher, how oversold they were. It's like somebody let it out of the gate. It's like a horse race, this thing. Just took off. But it can be as volatile as it wants. Like, if we were going to long this and we saw the upper value range here, would that not be a target? Yeah, sure it would. Right? If it wants to continue to move on, you're going to look for it to take out the previous wave's high. Roll over, fail breakout, take out the previous wave's low. Like we have three choices: up, down, and sideways, right? The sideways stuff doesn't do us any good. We want to avoid that as far as traders go. But the up and down part, that's where you can make your money. B&B is another one that just keeps moving along. Another great example of just continued support, right? Move higher, nice respectable retracement, move higher, retracement, move higher, retracement. And all of these moves higher come at, the 20 MA or certainly close to it. Which for me is kind of an organized move, and I like that. Like, we haven't even come back to test the 20 yet. Which eventually we will. Time and price will find a way to come together. And when that happens, it will probably feel like, price is falling off a cliff. Because it's done for the better part of this year is just gone higher. But we're not going to be surprised by what happens to it when it pulls back. Right? We know it's going to come back to the 20, and if it fails that, eventually it'll try and tag the 50. And if it doesn't tag that, then we just keep looking down for these levels where it's been before. The volume profile shows us where the price has not been, and we know, or certainly not been with any consistency, and that's why the gap is there. And we know what happens when we test those areas, both up and down. Price moves quick. Look at the weekly B&B. Look how far away you are from the 20. Like, this thing has just gone ballistic. So the weekly probably shows you more of what the concern would be on pullbacks. That's a lot of air. Right, you're around 790, 800. You're basically at 1,000 now. So that's a $200 drop. Or is price just going to go sideways for a while, allowing the 20 to kind of creep up to it, and then when it challenges it, it's not that much of a rollover? That's possible. Kind of like this. But this thing is still bullish. You know, we haven't come back to the 5 EMA or the T line or anything like that. So this is still a bullish chart. Where does it go? I don't know. Someone's out there drawing trend lines connecting all these tops, and that's completely ineffective, but it's just price exploration. Just one candle at a time on one time frame at a time. That's how we do it. We're not here to guess, right? We're just here to say, hey, this is a logical place for price to return to. In the event of a downtrend, then look for these levels. In the event of an uptrend, we're just looking for where past price has been. And if we take out past price, well, then that becomes the new high, and we just repeat and repeat. That's how it works. But drawing the trend lines is mildly effective in that case for determining where price is going when it's all exploration. It really is a guessing game. Let's look at NVIDIA for those that are into NVIDIA. What do we see on this chart? Parabolic move. This is the daily. There's our weekly. Let's use that. So what happens when, this is price exploration, right? Just like we were looking at the other chart, there's an example of an all-time high, a retrace. Notice that the trend wasn't broken. Two equal bottoms, and now price has now taken out the previous wave's high. And then this process, just pretend this candle is this candle, and it's just going to repeat and repeat until it rolls over enough, and then what we see as support is then resistance. Is this a runaway freight train? Yeah. Will it always be a runaway freight train? Probably not. But for now it is. And you have to trade what's in front of you, right? And if you're a trader, this is a nice move higher. Well, you can't deny these things. And as unrealistic as someone might feel that it is, or how dangerous that it is, the chart is telling you what's going on. It's a real-time representation of what money's doing, not what people are saying. And what the money is doing is still coming into this. Just is. There's Tesla. What do we think Tesla's in the midst of doing? If this thing tops out and starts to roll over, it's going to look for the 20 and then the 50 and then the point of control. But when you look at the daily chart, is this bull trend still intact? Yeah. Like, Rico, this is kind of a candle that maybe scared some people, but did it hold the T line? Absolutely. Telling us that the trend was still good to the upside. It's not about what we think, it's about what the chart says. We look at this weekly, you can see a little, these are kind of two equal points in price. So we'll use that kind of double toppy kind of look. Would it make sense that price came back and tested maybe this area in here because it got kind of hot? Looks like it might fade a little. Yeah, it would make sense. But it doesn't mean that it's a total breakdown. You could catch support here and then move on. Or break down and catch support at the 20 or 50 and move on. It's not a matter of being right or wrong. It's just these are the options that we have. And when we start to weigh and overlap all of the tools that we use, the picture will start to become clear on what price is doing. And it doesn't matter what it is. I'm sorry to do this to some people because we've showed this chart in here before. And the warning was, be careful because this thing will turn around and break your heart. And probably is breaking some hearts right now. Right? This is canopy growth. Right? This is what, Canadian grandmothers were buying their grandsons and granddaughters with their inheritance. And it didn't work out so well. Just because something's beaten up doesn't mean, and remember, this is a corporation, right? This is a business. Just because it's been beaten up and just because it traded at, $590 some odd dollars, doesn't mean it's going to be $590 again. Like, this is a business that struggles to provide a path to profitability, struggles to decrease its debt. In fact, it takes on more, and of course has pressures of sales and inventory and so on and so on. The things that in crypto you don't have to deal with. Just, do I like XRP, or do I like Bitcoin, or do I like FEG, or do I like XPX? And if I do, I buy them. But, these are businesses, and there's a lot more attached to them. And, I know people that were doing this, loading up, thinking this thing's going to go to the moon, and it's like, I'm sorry, just be very careful because it's a heartbreaker. Tilray's another one. Where do we find resistance here? This is a weekly chart. Again, this is dragging an ocean bottom, right? But this is a weekly chart. Where do you find resistance? Point of control. So what was the upside potential? You take if you're trading stuff like this and you see it beaten up, you see a sell, you see the buy signal, right? The 50 is the first place you're going to be conscious of, and then the point of control, a thin red line. In a perfect world, that's what you're looking for. Break the 20, break the 50, find your way to the POC. And that's exactly where it starts to fade. This is another stock that was worth hundreds of dollars. And again, struggles to provide a path to profitability. That stuff matters in the stock market. Or at least it will. If you guys have any tickers you want to look at, I don't want to get in the weeds of what they do. You can look for yourself. But it's a chart. When I looked at it, I saw it hit the bottom of the value the lower value range on the volume profile. And then when it broke the 50, I'm like, you know what? This is cents on the dollar. Let's take a flyer. And then the thing's exploded. You have no idea it's going to do that. You just don't. But all of a sudden it has a heartbeat. Now, are you going to see these big red candles and you're going to panic? No, you don't have to panic. You just have to be aware. And you have to be prudent and responsible with your trade and your investment. It's your money, right? No one's going to look after it better than you. If you don't take care of it, then it's a real problem. But you get to make a decision up here at the 20. Do I take profit? Maybe I buy more? I don't know. But because you understand how the ebb and flow of price works, you're aware that you need to pay attention here. If you break the 20, it could be problematic, and you may look for the 50. This has got all grayed out in here, which means it's light volume with some gaps. We know what happens when we run into that. But the point is that it has a heartbeat, and it was cheap. And you know what? It's trading like a real stock now. So don't always... What's that?
Sorry, I said that would have been oh, I'm losing my voice. Sorry. I'm sick right now. So
That's
I'm
okay. No
battling the
worries. You
flu,
don't. I'm losing my
the
voice a bit too.
change. Oh, I hate the English weather when we're switching from summer to winter.
This is the oil chart again that we've looked at.
I'm gonna shut up because I can't
That's okay,
speak.
Mike.
Sorry, Blunt.
No worries.
Continue, Mum.
This is our oil chart we've looked at. We talked about this before. There's the only thing that's on this chart is just our trend lines and things that we've drawn. Our 6166 level that's been there forever, and our script. And over the last week, early last week, there was a lot of excitement again that maybe oil's taking off. We're going to start pushing that $70 level, and it's just no. It's just not. It's just not there. Right? We're trading well below some very, very, very long-term averages. And these long-term averages, the way I was taught, can tell you a story. So in commodities where you see them, well, there's lots of trading or historically, you're going to see the long-term averages appear on your longer time frames. This is a weekly. So this pink line, although it's the 500-day moving average on a weekly chart, what does it really represent in, all those days represent in years? Almost 20 years, I believe. The 1,000-day is even more. This is probably 40 years worth of price history on a weekly time frame. So what does that tell you when you can't, when you see this level act as support and resistance so often? Right? This is what I've been speaking to for a long time. It tells you that there is the potential of a structural shift that could be taking place. When you break those long-term, multiple year, decade levels, it could be an indication that there's a longer term trend that's in the midst of being transitioned, or you have some structural issues in the marketplace. To me, I don't really know which of the two it is or other possibilities, nor do I really care. What I care about is the ability to understand where price may go if certain conditions exist or persist. And on this weekly oil chart, I'm using the weekly because there's so much time here now, the daily is probably difficult to see. However, the position always was that if you break certain levels, that you will find past price, that current price as it fades. Look at this doji at the top of a bull run, right? If it was to continue to fade, that ultimately it would find past price. See, this isn't a made up number, right? 6166 isn't a made up number. It's a representation of where price has been in the past, because I know where that price, what it looks for in real time, it looks for past price. Look at it all, right? Look at it all through here. Here. I know it's going to be hard to see on your screens. Here. Right, that's 2015. And it goes back even farther. So 6166 was a real number. It's where price has been before. And we know that current price would be attracted to past, and that's exactly what's happened. And as you can see, this is a real level because we've been here 11, 12, 13, 14 times. And this is still what I believe on oil where we're going to stick around, that neighborhood. To the downside, what's the risk? If we don't hold this level, should have stayed on the weekly, the $50 level becomes psychological, right? It really does. And when we start to look at some other levels, throw on some of our major moving averages, I'm going to show something. Okay, so we've broken the 50, we've broken the 20, we've broken the 200. For shits and giggles, let's put the 100 in there. We've broken that too. So what's left? The 500 MA monthly. That 47.15, 47.20, something like that. That's the next level. I'm not saying that's where price is going absolutely positively. What I'm saying is that if this downtrend continues and price continues to be weak, that this $50 level and or 500 MA monthly is in play. If this turns out to be a failed breakout, right? Here's our two equal bottoms that we like to buy. We get 3 green candles that wick out where on the monthly? Our trend line and the 200 MA monthly. Previous month's candle fades, closes below the T line and below the 5 EMA, and we open at the bottom of that previous candle and have faded since. Any test has faded of the T line on this current candle. And the month's almost over. And we came back to 61.66. So if this is a failed breakout, price rolls over and does what? Takes out the previous wave's low. That gets you into the 50s. Now again, this is a monthly chart. This candle's almost complete. There's only a little bit of time left on it. So we're going to be getting a new candle in the not too distant future. Could 61, 66 level be used as support, and price kind of collects and bounces in there and maybe catches a bid and moves higher? Sure. But in order to take this seriously, what do you have to do? You're going to have to trade above 70, I'm going to say $75 consistently to be considered in recovery mode. Until then, you know, this thing has been, like someone said to me earlier in the week, if oil would only make up its mind on what it wants to do. Are you kidding me? Like, that's shocking to me, because for like since September of 23, this has been nothing but a dart down. And an organized one at that. It's not like it's volatile reacting to geopolitical stuff or anything. It's been trend down, make a lower high, trend down, lower high, trend down, lower high. Like, come on. You've been told for 1.5 years what's going on here. What do you mean waiting for it to tell you what it's going to do? It's already done it, and it's not done yet. Like, I don't get that at all. Now, it would be just as irrational if someone said, I don't know what it's, you know, why doesn't it tell us what it's going to do from up here as it's going higher? Same applies, but come on. It's been pretty clear what's going on here. And it still is going on. It's not done yet. So, that's the black gold.
You know what? Since you introduced us to oil, yeah, well, introduced me to oil, I've been keeping an eye on it, and it's done everything you've said, following the trend lines. Yeah, I've just been keeping an eye on it. I've entered a few trades, and I'm not gonna lie, my emotions have kicked in, where I should have just said, "No, Mike, follow Blunt's technique." And just yeah.
Listen, the hardest part of what we do
It
here,
happens.
the hardest part of what we're doing is the doing what we're told, right?
Yeah.
We spend a lot of time practicing, trying to get better, and then when you actually use real money, it changes things, right? When you're actually in a trade. And
So much.
yeah, and you really have, that's why the demo trading, to Rico's point, is really valuable, because it doesn't address all of that, but it gets you on a live chart with something to lose, or gain, and it becomes more real. And then when you graduate to real money, it feels even different. But the demo phase, or the, the practicing phase, is giving you the opportunity to find that rhythm, right? Like that ideal setup. Like Rico and I were talking earlier before we came on about, how many trades, you know, we could take in a day or in a week, but then looking for the ideal setup. And I think if you look for your ideal setup first, you'll probably find yourself taking fewer trades just by default, but you'll make better trades by default by
100%.
following
Oh,
that setup ritual, right? Hey, look, are you, like, maybe there's 5 parameters or 4 parameters that you're looking for to get confirmation, whatever the number is. There's going to be times that you don't get them all, right? And you have to make a judgment call. And by this point, if you've been hanging out here long enough, you probably have that ability now to make those judgment calls, right? What we want to be able to do is give a trader an edge, right? We're all looking for an edge of sorts. And what we're looking at here is the futures contract for the Dow. It's YM. I could use ES or now as well. I'm just using YM today for this. This is a 4-hour chart, or sorry, a 1-hour chart. Here's our 4-hour. And what I find really effective is the script on the futures contracts overnight. So for example here, that's 9 a.m. What's this one? That's 10 a.m. This is the one here. So this came overnight at 12 o'clock in the morning. And so you had a nice opportunity here. What happens? Price basically comes back and takes out this low, right down here. Then you get the snapback, and this was basically a flush candle. And the trend down continues. And why I'm showing you this one with these 2 skis here is because I don't want you to feel like when this happens to you, and it will happen to you daily sometimes, right? You're in a short, you get a move down, you probably got to stop in somewhere, and then you get stopped out. Or it doesn't matter. When this happens to you, you don't need to take a day to regroup, right? It's not a crime or any shame that you got stopped out on a trade. What this does give you is an opportunity to re-enter that trade. So, you know what, you got stopped out or you closed it for whatever reason, which is fine because you're taking your money off the table, and there's never anything wrong with that. And then you see this appear and you're like, darn it, right? So, but what this does is gives you the opportunity to re-enter the short. Don't be afraid just because you closed 2 candles ago or the candle before, that the next candle presents you with opportunity. The chart will tell you. So look at what you're looking at, right? There's the candle that made everybody nervous, but look what's behind it. You ever shut your candles off? Just trying to get a cleaner look at what's going on? Because yes, we trade price, but we respect the trend, right? We got a sell signal. The trend was down. We get a move higher. Points mean what? Rapid changes in direction, right? The red starts to show up. The next candle's a monster red candle, and the trend down continues. So all this was just a means to try and flush you out. Right? This is why you guys don't run stops when you should for these BS candles, right? Because they'll stop you out or they'll liquidate you, and you're like, damn it, right? This is right. That's what these are here for. They're there to flush you out. But don't be afraid of the volatility. So this is like you're talking, Rico, do I leave some on? Do I take it all off on the trades? This is the kind of nonsense that was frustrating me. So when I would hit a target, usually the whole trade comes off. But the most important thing in what you see here is this divergence, right? All of this BS up and down stuff didn't change this trend, did it? The trend was still down. NAS 100. This was overnight. This is another example. This is about 10 a.m. This is 10 a.m. this morning, or yesterday morning. Would it have been? Yeah, yesterday. Look what you see at the top here. Doji candle. That's what you'd be looking at. Perfect buy signal here. There's your two equal bottoms. The next candle produces this giant thing produces the buy signal. Divergence kicks in, and then you see this. It's okay to say, yeah, you know what? This has been a nice run. I'm okay with that, right? And price fades. And fades and fades. 12 p.m. You get that signal. You knew something was up, but then you get your signal and price continues to fall. This might kind of went sideways, didn't it, actually, in the end, but a little bit of a drop, not what you would hope for. But your signals were clear. Same with the ES. So that's the contract for the S&P. And, you know, if for those that do trade futures, I find the overnight sessions sometimes more fun and more rewarding. But nevertheless, you get nice, clean signals, right? Look at these sell signals. Nice, clean buy signals. So this is 2 a.m. in the morning. Now, if we're using your alerts, we're getting an alert on this 1 hour saying, hey, signals flashing, or we're getting a cross of X over Y, whatever. And you get that alert, and it gives you the opportunity to get in the trade. You don't have to take every one, right? When you look at it, the setup might go, I'm not quite into that. But at least you.
Hey, Blunt, I'm sorry to interrupt you. How can you set up those alerts so that it's when the buy signal comes on? Is that what you're, or is it just a certain price point, or is it possible to say, let's say, hey, a buy signal just got printed. Is there a way to set it up where you would get I would love an alert if the buy signal came up like on the hourly chart or something like that. I would definitely get up and go look at it every time.
So I have to play with it more to see if I can produce an alert with this signal. I'm not sure.
That'd be crazy.
I can, but what I can do, and I do this myself, is so one of the things that sets the alert off. So there's stochastic RSI and stuff like that working in the background, but we're also working off the T line and the 5 EMA, right? So I will just set up a simple cross, right, on that time frame. That might be all you need. It would at least, in most cases, draw your attention at the right time.
Got it. So let's say I can set if you don't mind, can you show us an example how to set that up for like maybe somebody who's new? Because TradingView for us, we digest this every day, but it can be intimidating for people.
So this is the weekly chart of CFX. I flipped to that because I thought that was what you want to talk about. So it's when you right click on your screen, you can, that window pops up here and it says add alert on CFX. All right, so tells you the symbol, the condition is price. You can change any of this. So I'm going to change this to EMA 5 crossing EMA 8 on the 1 hour chart. Okay, that's what I would do. And then your trigger, you can have it like only once per bar, once per minute, that kind of stuff. If it's set to be too sensitive, it'll drive you insane because it might cross during that 1 hour period 6 times. Right, so you'd be getting an alert every time.
Yeah.
But you know, I usually do once per bar, just so that I get some sort of an alert and I can look at the chart at the very least. And then you can set an expiry. So I can go far out here to November 29th, for example, and it will stay active until that time. Right, so then you hit create, and then what will happen is up in the top right hand corner on TradingView, underneath the little ribbon, there's a clock, and if you click on that, it says alerts. Right, so when I click on the alert tab, it shows what I just set as an alert. EMA 5 crossing EMA 8. And when it gets triggered, you'll see a little notification here, and then you'll also get an opportunity to set it for like mobile, like a text or an email and all that kind of stuff, which can be really annoying in the middle of the night if they're all going off at the same time. Just ask my wife.
Yeah.
So,
Yeah. But yeah,
that's
I think that's some good alpha. I think I'm not sure, but I was just playing with it right now as you were talking. I think I might have found out how to do it where that buy signal is the one that it reads it off,
oh
but
yeah,
we'll
okay.
see. Yeah,
Oh
so
yeah, there it
maybe,
is. You're right, Rico. There you go.
yeah, yeah.
Just right click on it.
So
I never did that. Oh
oh
my
my God,
God,
yeah.
this is awesome.
This
Oh,
is why we do this
this is
live,
why we
bro.
do this live. This is, see what I learned today? I'm so excited now. I split myself in half because
Because
I've been trying to
man,
figure that. I don't know why I never did that. Maybe because it was too obvious. So,
I think there's something there, that's for sure.
you know, here's your
So,
CFX 1 hour. Look at the respect this thing has been given the upper and lower value profile on the 1 hour.
Absolutely.
Right.
And if you're a range trader and you start to be able to use something that's solid, like some kind of strategy, it's respected that nonstop. That's a
Absolutely.
range that you can live in.
Yeah, absolutely. Let's look at ETH
I got a
quickly.
question.
Sure, Mike, go ahead.
Yeah, so just looking at Nasdaq, last 100, and I'm seeing because you're like so I like to hop for gaps within the market because price likes filling gaps in the market. So I'm seeing two gaps right here. So if you search the daily time frame, and
Mm-hmm.
then if you're looking at so price level around 20K, between I'm sorry, people. England is killing me, man. English football is killing me. So, uh, so just about 220, 20.
Yeah, I can,
Oh my
I
God.
can see, I can see what
You see
you're
the gap that I'm
referring
seeing?
to. Yeah.
Yeah, yeah. So, I'm gonna shut up because
we,
it's
yeah, don't
okay.
don't hurt don't hurt
Yeah.
yourself, Mike.
I
So
got, I got 20, so around 20, 2,300
yeah,
and
yep.
2,300 to 2,100. And then you've got another one also, 18,400 to 18,300. I'm gonna
So
shut up after this one because
sure.
I can't
So
talk no more. So
those. So
you
you're
think not
right.
you?
So you're right. Those are all kind of gappy areas. But before you get down to 2,300, um, there's a lot of there's a lot to give away before that. And the question then becomes, do you actually get down that deep? It's hard to say, right? The gaps are there, so the vulnerability is there. But I mean, that's a significant drop in price to get down there. And I'm not saying it's not doable, but I think we just have to just look at it as a level by level process, right? Like when oil was 95 or 93.50, did 61,
Yeah.
$70 sound impossible? Yeah, it did, right? But as the evolution of a breakdown starts to take place, all of a sudden those levels and those numbers seem less and less unlikely and then more likely. But it is a process that takes time. That would be, a considerable amount of time before we would find those levels, I believe, because look what you would have to, there's the 20, the 50, and the 200. Um, Keep in mind that
Yeah.
when you test these levels, Mike, you might get support, right? And then they bounce and they kind of the duration of what you're suggesting would be a while. Are those gaps there and legitimate? Absolutely. Like this big one below the volume, or sorry, the point of control is quite noticeable. But I mean, you would
Yeah.
really have to let
Yeah.
go in order to get there quick. It would have to be this type of event, right, that we had um, last year.
So it's a point to just keep
Hello.
an eye on. You know, set
Yep.
an alert.
Yep.
Just
You can.
try to keep
It's
dips
great.
point.
Like
And
I'm impressed that you're taking the time to identify downside risk on longer time frames, right? You have to do that. But ultimately, you're
yeah,
trade. You
because
have to trade what's in front of you.
yes, sir.
Yeah.
Yes, sir. Yeah. And try not to die in the process.
Yeah. Um,
England is killing me, people. I want to move back to Africa. Sorry, I'll
here's
let you do your thing. Apologies,
sure.
I'm gonna mute myself.
Here's Solana, guys. We looked at Solana last week as well. And we talked about this big move down and how this thing might pan out. And here we are. You've had 3 or 4 healthy days of price action, but again, not enough momentum to pull the 5 EMA up through the T line and start to trigger a trend change. That's not what we got. What we got was, we're starting to look like, anyways, a failed breakout. There's your 2 equal bottoms again. You challenge the T line and then boom, fail. So this is looking like a failed breakout. The divergence between the T line and the 5 EMA is still pretty heavy, showing us that that trend is intact. And we look for the previous wave's low at 192.67, something like that. That would be a target to the downside. And of course, you're going to have to deal with the point of control, but fail it, and guess what? Volume gap. Making, if you get into that gap, it puts the 200 in play. The 200 is in play actually already, to be honest, because you've broken the 20, you found the 50 and broken that level, putting the 200 in play. I'm sure if we throw the 100 up here, it'll be somewhere in the middle, right in here, so you might contend with that first. But look where this move took off, guys. You've got the 50, the 200, the 100 MA all blended in here, and bang, price, that's support, right? Those 3 things together are support. and price came back and tagged that level of support and bounced. And that's really what triggered this big run up. But now we're over, right? So now we have a move down, a retracement higher, and if we start to fade even more, then you're going to confirm that you're in a bit of a downtrend here. Downtrend, retrace higher, take out previous waves low, and there we go. I'm so excited now that I can do those bloody alerts with the signals. I can't thank you enough for doing that.
Playing with what sounds I want now.
I know.
I don't think I've ever had blood so excited.
What do they say? Most great discoveries were accidents or something, right?
Yeah.
So, anyways, thank you for that.
Yeah, I'm setting my alerts right now to see what's up. I'm gonna set some lower time frame ones just for fun, but I'm playing with the sound effects that we get to have. I think I've gone with this one. Dun, 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 means hey, time to make some money.
Rico, you're on fire, my boy.
So this is why
I love
this is which is the Dow, right? It's just, you can see that this has still got some support here. If it breaks down, it's hard to see this chart just capitulating now because there's so many levels of support there, but it's doable. It can happen. But if you guys don't have
with
any
with
other...
with the Dow,
Mm-hmm.
because obviously well, not obviously, I'm talking as if I know this stuff, but again, I'm still a student. But Nas and Dow work hand in hand, right? If I'm not mistaken.
Not
So,
necessarily.
well,
They all move together in a sense, but there's always one that moves sooner.
yeah,
Right.
I've noticed with Dow, it's more so when Dow moves, it moves significantly, like like a bullet compared to Nas. So if Nas moves like by a few hundred points, Nas is moving. Sorry. So Dow moves more than Nas. Um, but I've noticed this sort of work hand in hand in a sense. Um, hence why I don't like to trade the Dow because if if Nas ain't performing very well, Dow hurts. Um, but both of them right now, they're reacting off the 20 and the 50, which I'm kind of keeping my eye on them. Because they're in between the 20 and the 50, but we haven't got a clear signal.
No,
Um,
you just have to be patient and kind of,
yeah,
wait your turn. The
yeah,
chart will
and
tell
again,
you, yeah, the chart
yeah,
will tell you what it's going to do when it's going to
this
do
is
it.
where your teachers come into play,
Yeah.
man. This is where your
Here's,
teachers come into play. Because
here's what I'd
few
like to
few
leave
months
you with.
ago,
Yeah. I'd like to leave you with this about the Dow and the Nas and the S&P. The Nasdaq and the S&P are market cap weighted. The Dow is price weighted.
so what do you
And
mean market
well,
updated?
it's basically part of the metric on how it calculates its value is based on market cap, whereas the price, the other two are market cap. And that might
I was kind
explain some of what you're talking about.
yeah. Yeah, because whenever Nas moves,
Mm-hmm.
Dow always moves faster. So I was always like curious as to why. Because if I'm not mistaken, again, complete novice here. So obviously Nasdaq is top 100 tech companies
Mm-hmm.
or 100 companies within the Nasdaq. Dow is the top 30 within the top 100. S&P is its, you know, S&P.
Mm-hmm.
So what I've noticed is whenever there's like some sort of well, earnings report, news report, something major that's gonna affect the NAS, Dow moves ridiculous. Or if something positive, Dow moves ridiculous, and then NAS catches up. So I've always been curious, like, and you pretty much explained it. So
You know what, there's a reason for everything. I don't know if what I explained is exactly the reason. I doubt it is. There's so many different variables, but the takeaway for you is, or I would hope is, don't get lost in the all the little semantics and mechanics of this, that, and the other thing. Everything that you need to know is on your chart. Everything that you need to know is on your chart. And
just avoid them
just
in the
yeah,
news
just
report.
don't overthink things. Going back to Rico and the 15-minute CFX, you can kind of, we call this, right? Like here we are, filled the 200 with that wick. You came right back to the 20. Let's see if we get support here and bounce and challenge that level again. So it played out exactly
Yeah.
as we thought. So if there's nothing else, no more questions for today, I've got another meeting to get to in the not next 15-20 minutes or so. But we will regroup on Thursday and pick up where we left off. Rico, superstar, thanks for showing me the stupid things with the. I can't believe I never did that, but I'm so glad that you did.
And we found out
Rico
together,
can
man.
be the teacher.
Thank you for this. For
Back. I'm glad you have fun on your vacation, and glad to have you back. And yeah, this was a fantastic little live stream. I'm gonna do this for Blunt. If you guys are listening on X, we got some really good numbers. Make sure you guys give them a follow. If you guys are listening to that stream, like and repost that stuff as much as you guys can, because hey, we're giving away stuff that nobody can take away from you once you got it. And
That's right.
we do this live. So definitely, I think it's Tuesdays and Thursdays, Blunt, that you're
Tuesdays and
doing them.
Thursdays, as close to noon as we can get. I put that in quotes. And yeah, these sessions are also on my YouTube page. It's at Blunhouse TA and at FEG Official on YouTube as well. You can see them there anytime.
You have a good day, man. Thank you guys for pulling up as well, man. I had a lot of fun. Later on today, we do have a space in about 40 minutes. Pull up to that. But after my live stream, some of the winnings that I made from CFX during this live stream with Blunt using his figure, I will be giving some of that away during the live stream. So make sure you guys tune in for that later on.
Okay, Rico, always paying it forward. That's the way to do it, brother.
Have a good day, bro. Thank
Okay.
you for everything.
Take care, everybody. We'll see you on Thursday.
I've just joined your YouTube channel, bro.
All
All
right.
right,
Thanks,
cool.
Mike. Take care.
Yeah, yeah. I've been wondering like how do I get on this one? And yeah, no, I've got it. So I'm gonna post and repost and yeah, awesome, awesome. Rico, I'm gonna join yours as well, man.
Pleasure, bro.
Right.
Take care, everybody. We'll see you on Thursday.